$1,690, $2,410, and $2,830 per month related to Social Security and SSDI recipients in 2026. I'm going to explain all the details here because we just received several major announcements from Social Security regarding 2026. This will affect millions upon millions of beneficiaries. I'm going to clarify exactly what these dollar amounts mean, who needs to pay attention, why you need to care, and precisely who each amount pertains to, and why it's absolutely critical for you to understand this. Social Security changes numerous things every single year, and this is yet another list of those changes being implemented starting in the new year. We're going to walk through all the details in this video. Let's get right into it. Before we go any further, I need you to do something extremely important right now. Drop a comment below and tell me what state you live in. Just write your state name in the comments. Why? Because income rules, benefit amounts, and available assistance programs vary significantly by state, and I need to understand where you're located to provide you with the most accurate information for your specific situation. Some states have additional protections for beneficiaries. Some states have supplemental programs that can help you, but I can't guide you properly if I don't know where you are. So right now, pause for 5 seconds, scroll down, and comment your state. Do it now. This matters for your benefits. Hit that like button right now because these income limits directly affect whether you keep your full benefits or see them reduced. When you like this video, you help this reach more beneficiaries who desperately need to understand these rules before they accidentally lose money. Do it now. Alright, I'm discussing two groups of beneficiaries in this video. Number 1, Social Security retirement recipients, which yes also includes spousal beneficiaries. And number 2, SSDI, Social Security Disability Insurance recipients. Not to be confused with SSI beneficiaries, which is similar to SSDI but also extremely different at the same time. They're very different programs. This encompasses tens of millions of beneficiaries who absolutely need to pay attention to these dollar amounts in 2026. Now let me be very clear about something before we dive into these numbers. These amounts are not new benefit payments you're going to receive. These are not bonus checks. These are not extra money coming to you. These are earnings limits, thresholds that determine whether you can work and earn income while keeping your full benefits. If you exceed these limits, your benefits get reduced or eliminated. So understanding these numbers could be the difference between keeping your full monthly check or losing hundreds of dollars because you didn't know the rules. Let me explain why this matters so much to you personally. If you're struggling to survive on your Social Security or disability check alone, you might be thinking about picking up some part-time work, doing some consulting, earning a little extra money to cover rising costs. That's completely understandable. Inflation has destroyed your purchasing power. Your benefits haven't kept up. You're making impossible choices every month. So the idea of earning a little extra sounds good, right? But here's the problem. If you don't know these exact dollar limits, you could accidentally earn too much and trigger a reduction in your benefits. You could end up working, earning money, and then discovering that Social Security is taking back part of your monthly check. You could actually end up worse off than if you hadn't worked at all. That's why these numbers are absolutely critical for you to understand. Subscribe to this channel immediately and turn on notifications. Social Security rules and income limits change every single year, and missing these updates could cost you hundreds or thousands in lost benefits. Subscribe now so you never miss critical information that affects your money. Let's start with the first number, $1,690 per month. This is the substantial gainful activity threshold for non-blind SSDI recipients in 2026. What does that mean in plain English? If you're receiving disability benefits and you are not blind, you can earn up to $1,690 per month in gross income from working without risking your disability benefits. But here's what you need to understand. If you earn even $1 over $1,690 in a month, Social Security considers that you are engaging in substantial gainful activity. And if you're engaging in substantial gainful activity, that means Social Security believes you're capable of working and supporting yourself, which means they can reduce or terminate your disability benefits. Now, it's not always immediate. There are trial work periods and grace periods built into the system. But the fundamental rule is this: stay under $1,690 per month if you want to protect your SSDI benefits. That's $1,690 in gross earnings, which means before taxes are taken out. So if you're thinking about working part-time, you need to calculate very carefully to make sure you don't accidentally cross that threshold. Let me give you a real example of why this matters. Let's say you're receiving $1,400 per month in SSDI benefits. You're struggling to pay your bills, so you take a part-time job that pays $15 per hour. You think you'll just work a few hours a week to make ends meet. But if you work 120 hours in a month, that's $1,800 in gross earnings. You just exceeded the $1,690 limit. Now you're at risk of losing your $1,400 monthly benefit. You thought you were helping yourself by earning an extra $1,800, but you might end up losing $1,400 from Social Security. The math doesn't work in your favor. That's why you need to know this number code: $1,690. Write it down. Remember it. If you're on SSDI and you're working or thinking about working, stay under that threshold unless you're prepared to potentially lose your benefits. Now let's talk about the second number: $2,410 per month, which equals $24,480 per year. This is the earnings test limit for Social Security retirement beneficiaries who are under full retirement age in 2026. Let me explain who this affects and why it matters. If you started collecting Social Security retirement benefits early, before your full retirement age, which is somewhere between 66 and 67 depending on when you were born, then you are subject to an earnings test. That means if you're still working while collecting benefits, Social Security will reduce your benefits if you earn too much. The limit for 2026 is $2,410 per month, or $24,480 for the full year. If you earn more than that amount, Social Security will withhold $1 in benefits for every $2 you earn above the limit. Let me show you exactly how this works with a real example, because this confuses a lot of people. Let's say you're 64 years old and collecting Social Security retirement benefits of $2,000 per month. You're also still working and you earn $30,000 during 2026. The earnings limit is $24,480 for the year. You earned $5,520 more than the limit. Social Security is going to withhold $1 for every $2 over the limit. So they'll withhold $2,760 from your benefits over the year. That's $2,760 less in Social Security benefits because you earned too much. Now here's what makes people angry about this. You worked. You earned money. You paid Social Security taxes on that money. And then Social Security turned around and reduced your benefits because you earned too much. It feels like you're being punished for working, and in a sense, you are. But here's what you need to understand. This earnings test only applies if you're under full retirement age. Once you reach full retirement age, you can earn as much as you want without any reduction to your benefits. The earnings test disappears completely. So if you're 64 or 65 and thinking about working, you need to decide, is it worth earning extra money if it means losing part of your Social Security? For some people, the answer is yes, because they need the income. For others, it makes more sense to wait until full retirement age to earn extra money. The key point is this: if you're collecting retirement benefits early and you're still working, you absolutely must stay aware of the $2,410 monthly limit, or $24,480 annual limit. If you exceed it, you will see reductions to your benefits. Track your earnings carefully throughout the year. Don't let yourself accidentally earn too much and lose hundreds or thousands in benefits. Now let's discuss the third number, $2,830 per month. This is the substantial gainful activity threshold for blind SSDI recipients in 2026. If you are receiving disability benefits and you are statutorily blind, you have a higher earnings threshold than non-blind disability recipients. You can earn up to $2,830 per month without risking your disability benefits. That's $1,140 more per month than non-blind recipients can earn. Why the difference? Because Social Security recognizes that blind individuals often require specialized equipment, accommodations, or additional expenses to work, and the higher threshold accounts for that. But the same principle applies. If you earn more than $2,830 per month, you're engaging in substantial gainful activity and your benefits are at risk. So if you're a blind SSDI recipient who is working or wants to work, remember that number, $2,830 per month. Stay under it to protect your benefits. Now let me talk about something that doesn't get enough attention. These thresholds go up slightly every year based on inflation and wage growth, but they don't go up nearly as fast as your actual cost of living. The $1,690 limit for non-blind SSDI recipients represents maybe a $50 or $60 increase from 2025, but your rent probably went up $100 per month. Your groceries probably went up significantly more. Your utilities, your insurance, everything costs more. So what Social Security is telling you is this: you can earn a tiny bit more than last year before we cut your benefits. But the amount you can earn still doesn't come close to covering your actual increased costs of living. You're caught in a squeeze. You need more money to survive, but if you earn more money, you risk losing benefits. It's a terrible position to be in. And this is why so many beneficiaries feel trapped. You can't afford to live on your benefits alone, but you can't afford to work too much because you'll lose benefits. You're stuck in this narrow window where you need to earn just enough to survive, but not so much that you lose everything. It's exhausting and stressful and fundamentally unfair. Now let me talk about the bonus number I mentioned at the beginning. $5,430 per month or $65,160 per year. This is the special earnings limit that applies to people who will reach full retirement age in 2026. And this is actually good news if it applies to you. If you're going to hit full retirement age sometime during 2026, you get a much higher earnings threshold in the months before you reach that age. You can earn up to $5,430 per month without any reduction to your benefits. And if you do exceed that limit, the penalty is smaller. Social Security only withholds $1 for every $3 you earn over the limit, instead of $1 for every $2. But here's the really important part. In the month you actually reach full retirement age, the earnings test disappears completely. You can earn as much as you want with no reduction to benefits. So if you reach full retirement age in June 2026, you can earn up to $5,430 per month in January through May. Then starting in June, you can earn unlimited amounts with no penalty at all. This is critically important if you're planning to work in the year you reach full retirement age. You need to track your earnings month by month to make sure you don't accidentally exceed the limit before you hit full retirement age. But once you reach that age, you're free to earn as much as you want. Let me also mention something else that's changing in 2026 that affects everyone. The maximum amount of earnings subject to Social Security tax is increasing to $176,100. Now, most of you watching this aren't affected by this because you're not earning anywhere near that amount, but it's worth knowing because it affects how much revenue goes into the Social Security system. And speaking of the Social Security system, let me address the elephant in the room. We're heading toward 2034 when the trust funds are projected to be depleted. When that happens, benefits will automatically be cut by about 21% across the board unless Congress acts. These annual increases to earnings limits and benefit amounts don't change that fundamental problem. The system is heading toward a crisis, and nobody in Washington seems willing to make the tough decisions to fix it. So what does all of this mean for you practically? Here's what you need to do right now. First, write down the number that applies to your situation. If you're on non-blind SSDI, write down $1,690. If you're on Social Security retirement under full retirement age, write down $2,410. If you're blind SSDI, write down $2,830. If you're reaching full retirement age in 2026, write down $5,430. Second, if you're working or planning to work, calculate your expected monthly earnings very carefully. Make sure you're staying under the threshold that applies to you. Build in a buffer if possible. Don't cut it too close, because if you accidentally go over by even a little bit, you could trigger benefit reductions. Third, keep detailed records of your earnings throughout the year. Save pay stubs, track hours, monitor your income month by month. Don't wait until the end of the year to realize you earned too much. By then it's too late to fix it. Fourth, if you're close to the limit, consider adjusting your work hours to stay under it. Is it worth working an extra shift if that extra shift pushes you over the threshold and costs you hundreds in benefits? Sometimes the answer is no. You might be better off working less and protecting your full benefit amount. Fifth, if you do exceed the limit, understand what will happen. Social Security won't immediately cut you off. They'll calculate the overage and reduce your future benefits accordingly. But you need to be prepared for that reduction. Don't spend money assuming you'll get your full benefit if you know you've exceeded the earnings limit. And finally, plan ahead for when these limits no longer apply to you. If you're approaching full retirement age, start thinking about what you'll do once the earnings test disappears. That's when you can finally work as much as you want without penalty. That's when you can maximize your total income from both work and benefits. Let me address one more thing that I know confuses people. Some of you are wondering, if I lose benefits because I earn too much, is that money just gone forever? The answer is complicated. For retirement benefits, you do eventually get credit for the months when benefits were withheld. Your benefit gets recalculated at full retirement age to account for the months you didn't receive benefits. So you're not necessarily losing that money permanently. You're more like delaying it. But for disability benefits, if you lose eligibility because you're engaging in substantial gainful activity, you don't automatically get those benefits back later. You'd have to stop working and reapply for disability, go through the approval process again, and hope you still qualify. So the stakes are higher for disability recipients. You need to be much more careful about staying under the earnings limits. Here's the bottom line that I want you to understand. Social Security has created a system where beneficiaries are caught between needing more income to survive and being afraid to earn that income because it might cost them their benefits. These earnings limits are meant to prevent people from collecting benefits while earning substantial income. But in practice, they often punish people who are just trying to make ends meet. A person earning $1,700 per month in outside income is not getting rich. They're barely surviving. But that person who's on non-blind SSDI just lost their benefits because they exceeded the limit by $10. Does that make sense? Does that seem fair? Of course not. But those are the rules, and until Congress changes them, you have to live within them. So please take these numbers seriously. Write them down. Track your earnings carefully. Don't let yourself accidentally earn too much and lose benefits you desperately need. These limits exist, they're enforced, and exceeding them will cost you money. Protect yourself by staying informed and staying under the thresholds. If this video helped you understand these earnings limits and how they affect your benefits, do 3 things for me. First, subscribe to this channel and turn on notifications. These rules change every year and you need to stay updated. Second, share this video with anyone you know who's on Social Security or disability. They need this information too. Third, go back right now and comment your state like I asked at the beginning. I need to know where you are to provide state-specific guidance. Remember, Different states have different supplemental programs that can help you. Some states have additional protections for beneficiaries. Some states offer assistance that doesn't count against your earnings limits. But I can only point you toward those resources if I know what state you're in. So drop that comment right now. Thank you for watching. I know this information isn't fun. I know these limits are frustrating. I know it feels like you're trapped in an impossible situation, but knowledge is power. Understanding exactly where these limits are gives you the ability to plan, to make informed decisions, and to protect your benefits. Stay informed, stay careful, and I'll see you in the next video.